Second Minister for Finance.
Mr. Deputy Speaker, I would like to thank all the members who have spoken on the bill and for their support for its introduction. Let me address their questions in three parts. First, competitiveness of the VCC framework, as well as clarifications on its features. Second, opportunities for local fund service providers and how we are working with them to capture these opportunities. And third, the potential impact on Singapore from a financial stability, risk and reputational standpoint. As Ms. Fumiha has highlighted, Singapore is, relatively speaking, a newcomer, competing with long-established fund domiciles such as Luxembourg and Ireland. Being a newcomer, though, has its advantages. We are able to take reference from tried and tested features of comparable structures such as UK and Ireland, so that our VCC framework is on par internationally and tailor the features to meet the needs of our industry. For instance, a key advantage of our VCC framework is its enhanced flexibility to be used for both open-ended and closed-end funds, and which are suitable across traditional and alternative investment strategies. This may not necessarily be available in other jurisdictions. Ms. Wu raised feedback that giving sub-funds legal identities would be a more straightforward and effective way to ring-fence their assets and liabilities. MAS did in fact consider this, but on balance decided against it. Internationally, corporate fund structures with cellular cells are structured either as protected cell companies, PCC, or incorporated cell companies, ICC. The key difference between the PCC and the ICC is whether sub-funds are accorded separate legal personalities. The PCC does not, and the ICC does. While the ICC structure provides legal certainty over the status of its sub-funds, it has significant limitation in allowing umbrella funds to reap economies of scale and is therefore not conducive to the operation of investment funds. For this reason, the PCC structure adopted by the VCC framework is also used in most international fund domiciles such as the UK, Ireland and Luxembourg, whereas the ICC structure is only adopted in Guernsey. Notwithstanding the lack of separate legal personality, VCCs are required under legislation to segregate assets and liabilities of sub-funds. This will mitigate cross-sell contagion among sub-funds under the umbrella structure, but at the same time ensure proper ring-fencing. I would also like to reassure Ms. Fu and Mr. Pereira that VCCs, including their sub-funds, can avail themselves of Singapore's competitive tax regime. As announced by the Ministry of Finance in its 2018 budget statement, a VCC will be treated as a company for tax purposes and will be allowed to enjoy our tax incentives for funds. Mr. Pereira asked about Sections 13R, 13X and 13Y of the Income Tax Act. The tax exemptions under Section 13R and 13X of the Income Tax Act will be extended to VCCs. However, Section 13Y is not applicable, as that is for prescribed sovereign entities and approved foreign government-owned entities. The 10% concessionary tax rate under the Financial Sector Incentive Fund Management Scheme will be extended to approved fund managers managing incentivized VCCs, and the existing GST remission for funds will be extended to incentivized VCCs. We intend for VCCs that are tax residents to access Singapore's tax treaties. Tax residents of VCCs and their sub-funds are determined based on facts and circumstances. To demonstrate that a VCC and its sub-funds are tax residents of Singapore, IRAS will issue a Certificate of Residence, or COR, in the name of the VCC with the names of the relevant sub-funds in the COR. Singapore will allow a sub-fund being part of a VCC resident entity to access Singapore's tax treaties. More details on the tax treatment for VCCs will be released by the end of this year. Ms. Fu has also noted that the importance of operational flexibility in closing down sub-funds. However, operational flexibility must be balanced against other considerations, including creditor protection. As sub-funds have assets and liabilities attributable to them, we need a fair, orderly and robust procedure to deal with the legal issues and practical difficulties that may arise in the course of liquidating a sub-fund and distributing its assets. Importantly, the legal obligations of parties in respect of a sub-fund's assets and liabilities must be clear. The laws and general principles on corporate liquidation under the winding up provisions of the Companies Act provide an established framework to ensure that the assets and affairs of sub-funds are dealt with in a fair and orderly manner. Insolvency practitioners in Singapore are also familiar with the winding up regime under the Companies Act and would be well placed to act as liquidators of sub-funds. Ms. Fu has mentioned there could be room to further streamline processes and enhance operational efficiency with regards to the procedure for closing down sub-funds. MAS will study this and consider if there is a need to make further changes in subsequent legislative amendments. Mr. Murali Pillai has asked whether it was intended for information relating to a particular sub-fund to be accessible by all shareholders of the VCC, including those who may not have interest in that sub-fund. Under the bill, a VCC's financial statements are required to be made available to all VCC shareholders. As Mr. Pillai pointed out, this would mean that financial information of individual sub-funds in an umbrella fund would be made available to all shareholders of the same VCC. One of the main benefits of the VCC framework is its ability to be used as an umbrella fund with multiple sub-funds. By not restricting shareholders' access to financial information of sub-funds within an umbrella VCC, this brings about economies of scale, as sub-funds within the umbrella fund would be able to consolidate certain administrative functions, including the preparation of financial statements. For the same reason, a VCC will also be able to provide its financial information to prospective investors. Such transparency will allow and encourage existing and prospective investors to monitor and assess the VCC's financial performance. They will be more informed and be able to hold fund managers to account. In terms of shareholder privacy, a VCC is not required to provide a shareholder with information relating to its other shareholders. An investor in a particular sub-fund will not have a right under the bill to obtain information such as the identity and shareholding of another investor in the same sub-fund. Mr. Pillai has also asked about the criteria for overseas fund structures to re-domicile as VCCs. The VCC framework will adopt similar requirements as the inward re-domiciliation regime under the Companies Act. We will, however, not require re-domiciling entities to be of a certain minimum size in terms of assets, revenue and employees, as investment funds are inherently different from operating companies. Moreover, imposing such minimum criteria for re-domiciling entities would restrict the entry for smaller funds, such as those investing in venture capital or those used to seed or launch a new strategy. MAS will provide further details on the operational process for re-domiciliation in the subsidiary legislation. Ms. Fu has asked whether more can be done to facilitate the adoption by local funds of the VCC structure. Existing local funds, which are companies, unit trusts, or limited partnerships, can restructure to adopt the VCC structure, for example, by incorporating a new VCC and transferring their assets to the VCC. MAS will also study whether and how statutory mechanisms to facilitate the adoption of the VCC structure can be provided for in subsequent reviews. The tax framework will be studied in tandem. One of the key features of the framework is that a VCC may pay dividends using capital. Mr. Pereira asked whether there are safeguards to ensure or to make sure retail investors understand that the VCC may deplete its capital when paying such dividends. Let me assure Mr. Pereira that the regulations under the Securities and Futures Act require offering documents of funds to contain all information necessary for investors to make an informed assessment. In particular, funds that pay dividends out of capital are expected to disclose that dividends may be made out of capital and the implications of such dividends for investors. MAS will, as part of its review of the fund's documentation, check that such disclosures are made. The Securities and Futures Act requirements will apply to VCCs as well. Looking ahead, Mr. Pillay has suggested that some of the features of the VCC framework, such as its ability to segregate assets and liabilities and avoid contagion risk between sub-funds, may benefit other financial activities, such as insurance-linked securities, insurance captives, asset securitization, and family offices. The VCC framework today is intended and designed for use as a corporate structure for investment funds. But I agree that some of the features could be useful for other applications. MAS will consider widening the scope of the VCC framework with appropriate modifications for applications in other sectors in subsequent reviews. Next, I will touch on the opportunities that the VCC framework will bring to Singapore. The introduction of the VCC framework will encourage fund managers to domicile their investment funds in Singapore. In turn, this will increase the pool of serviceable clients and create new work for local service providers such as lawyers, auditors, fund administrators, and fund custodians. So, for example, a new fund setting up as a VCC in Singapore will need, first, lawyers to draft the fund's legal documents, second, fund administrators to assist with the day-to-day operations of the fund, and third, accountants to prepare and audit the financial statements of the fund. The economic benefits arising from fund domiciliation will accrue to our local service providers and industry professionals. Over the past year or so, MAS has worked closely with industry associations, local service providers, and consultants to familiarize them with the value propositions and features of the VCC framework. The Fund Management Industry Associations, Investment Management Association of Singapore, IMAS, Alternative Investment Management Association, IMA, and Singapore Venture Capital Association, the SVCA, as well as industry consultants, have provided useful feedback on the VCC framework. They have partnered MAS to reach out to their members and clients through industry briefing sessions. MAS will undertake more engagement sessions in the lead-up to the introduction of the VCC framework. MAS is engaging local fund service providers as well as training providers to identify potential competency gaps and develop training programs to ensure that industry professionals have the requisite skills to cater to the needs of VCCs. Specifically to Mr. Supat's point about upskilling accountants, MAS has also been working with the auditing firms, as accountants will need to have the relevant competencies to support the preparation of financial statements of VCCs using either local or global accounting standards and principles. MAS will be issuing industry guidance notes prior to the launch to further support the practical implementation of the VCC framework. Mr. Supat asked whether the government will proactively engage foreign fund managers to come to Singapore. Ms. Fu and Mr. Pillay also asked if we can incentivize fund managers to set up VCCs here. To attract global fund managers and deepen their investment capabilities here, MAS has taken the lead to foster and promote a conducive environment for fund managers. Global asset managers, such as AIA Investment Management, which set up its first group-wide regional investment hub in Singapore, continue to anchor activities locally. The VCC will play an important role in enhancing Singapore's value proposition, which includes a robust regulatory regime. We believe foreign fund managers will find Singapore an attractive location to set up their operations and enjoy economies of scale from domiciling their funds in Singapore. Nonetheless, MAS will monitor the adoption and take-up of the VCC structure and consider whether specific incentives are needed to encourage more fund managers to set up funds as VCCs. Finally, let me address the points on the potential risks of the VCC framework and the mitigating measures and safeguards that have been put in place. Mr. Supat asked whether the flexibility accorded to investors to exit their investments in a VCC could cause disruptions or volatility to our economy. This flexibility is not unique to VCCs and is available to fund investors today. We recognize it is important for investors to have the flexibility to enter into or exit their investments at any point in time. MAS is very much aware of the risks and have taken steps to address them at the system and fund levels. MAS closely monitors systemic risks to the economy, including those that may be caused by capital flows through investment funds. Risks posed by the Singapore fund management sector to our financial markets are currently contained. A large part of assets under management in Singapore are invested outside Singapore in the Asia-Pacific region. The VCC provides an alternative structure of fund vehicle, but is not likely to significantly affect the investment behavior of fund managers and investors. Money invested in investment funds constituted as VCCs are therefore expected, in large part, to continue to be invested in assets overseas. At the fund level, all regulated fund managers, including those managing VCCs, are expected to put in place effective liquidity risk management frameworks and practices to ensure that their funds remain capable of fulfilling redemption requests in a timely manner when there are significant fund withdrawals. Fund managers may also use liquidity management tools such as suspension of redemptions and redemption gates under exceptional circumstances to pace out redemptions and help minimize the risk of transacting at fire sale prices. Mr. Ng has queried how we will safeguard against misconduct by VCCs and protect Singapore's international reputation. Mr. Pillay has also asked how MAS can ensure risks relating to money laundering and financing of terrorism are managed, in particular for certain managers that are not regulated by MAS. Safeguarding the integrity of our financial system against illicit funds and activities is paramount in ensuring that Singapore continues to be a financial centre trusted by international investors and global financial institutions. Singapore is committed to the global fight against money laundering and financing of terrorism. We remain vigilant to the risk of abuse of our financial systems as it grows in scale and sophistication. In crafting the policies for VCCs, we have considered these risks and put in place 2 levels of safeguards to address them, taking reference from international standards. First, we will impose anti-money laundering and countering the financing of terrorism, or AML-CFT, requirements on VCCs, essentially requiring them to conduct due diligence checks and monitoring of all VCC shareholders, including looking through any nominees to the controllers behind them. This will help to ensure that the VCC shareholders are bona fide and will deter criminals from attempting to abuse the VCC for illicit purposes, including tax evasion. In practice, being primarily an investment vehicle, the VCC can choose to outsource this function to its fund manager or distributor, such as a bank. However, MAS will require VCCs to delegate the performance of AML or CFT controls to a financial institution that is regulated and supervised by MAS for AML CFT purposes, to be assured that VCCs are leveraging on well-qualified firms to do these important checks. The financial institution to which these AML-CFT requirements are delegated will be required to obtain information on the VCC shareholders to the extent necessary for them to perform their delegated responsibilities. MAS will consider providing further guidance on the eligible AML-CFT regulated financial institutions which a VCC can delegate its AML-CFT requirements to. I should highlight that the VCC is ultimately responsible for its own AML-CFT obligations, regardless of which financial institution the VCC outsources these functions to. MAS will adopt a risk-based supervisory approach, and higher-risk VCCs will be subject to closer scrutiny. MAS will not hesitate to take firm action against any VCC if AML-CFT controls are found to be inadequate. Second, to ensure that VCCs are set up for legitimate purposes, there are requirements in the bill as to who can manage them. VCCs must appoint fund managers regulated by MAS and directors who are fit and proper to manage and give directions on its activities. ACRA may direct the removal or replacement of a director who, it is satisfied, is not fit and proper, where it is necessary in the interests of the VCC's shareholders, or the public to do so. I agree with Mr. Lewis Ng that Singapore should not be perceived as a tax haven. Fundamentally, Singapore is a substantive economy built on actual economic activities. The requirement for VCCs to be managed by fund managers regulated by MAS means that substantial fund management activities are already conducted in Singapore. Singapore works closely with the international community to deter the abuse of financial system for the laundering of illicit funds, including proceeds of tax crimes. We have also implemented international standards to combat base erosion and profit shifting, or BEPS. Under our laws, profits taxed in Singapore must comply with the international arm's length principle to ensure that profits commensurate with the actual economic activities conducted in Singapore. Singapore exchanges financial account information with a wide network of tax authorities in other jurisdictions. As regards Mr. Gan's concerns about scams and Ponzi schemes, I would like to assure him that MAS continually reviews its regulatory framework to safeguard the interests of retail investors. For example, to enhance investor protection, amendments to the Securities and Futures Act were passed by Parliament last year to provide MAS with greater flexibility and powers to bring non-conventional investment products within MAS regulatory perimeters. This was after MAS had observed that a number of non-conventional products, such as buyback arrangements involving gold or silver and plantation schemes, were deliberately structured to fall out of MAS regulatory framework. It is an offence to operate a fraudulent or deceptive scheme. There are many channels by which MAS and other law enforcement agencies receive information on such suspicious investments, such as from members of the public, the financial industry, and other regulatory and enforcement agencies, local as well as overseas. Where the information received suggests a breach of laws, the relevant authorities will investigate and will take appropriate action. Mr. Gan also asked about the number of complaints against fund managers. The number of complaints has been relatively low, on an average of 13 complaints per year against fund managers over the past 5 years. These complaints generally relate to the closure of funds, fund performance or service matters, such as short notice given for submission of voting, collection of personal information, failure to receive statement of holdings. We recognize, however, that no amount of regulation can prevent fraud. Ultimately, investors still need to exercise caution and evaluate the risk and features of any investment product or schemes offered, taking into account information available on these products or schemes before making an investment decision. I strongly encourage investors to deal only with entities regulated by MAS and to consider the additional potential risks of dealing with investments and entities which are not regulated by MAS. MAS aims to safeguard the interests of consumers by ensuring that they are provided with adequate information to make more informed investment decisions and are dealt with fairly by financial intermediaries. MAS has developed a number of resources on its website and through MoneySense, the National Financial Education Program, to share with the broader public common red flags of investment scams and that investors should be alerted to. MAS will continue to work with industry, schools and other government agencies to enhance financial literacy among Singaporeans so that they can make sound financial decisions. Mr. Deputy Speaker, let me conclude. The new VCC corporate structure is a game changer, which will help position Singapore to be a fund domiciliation hub and enhance the value proposition to fund managers. It will attract more funds to domicile here and provide new business opportunities for lawyers, accountants, fund administrators and fund custodians. It will enhance our international competitiveness as a leading fund management hub and financial centre, while providing safeguards to maintain Singapore's reputation as a clean and trusted hub. Mr. Deputy Speaker, I beg to move.
The question is that the bill be now read a second time. As many as are of the opinion say aye. Aye. To the contrary say no. I think the ayes have it. The ayes have it.
Variable Capital Companies Bill.
Committee stage what day?
Now, sir, I beg to move that Parliament will immediately resolve itself into a committee on the bill.
The question is that Parliament will immediately resolve itself into a committee on the bill. As many as are of the opinion say aye. Aye. To the contrary say no. I think the ayes have it. The ayes have it. The question is that clauses 1 to 167 stand part of the bill. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. The question is that the first to third schedules stand part of the bill. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. Bill to be reported. Second Minister for Finance.
Mr. Deputy Speaker, I beg to report that the bill has been considered in committee and agreed to without amendment.
Third reading what day?
Now, sir, I beg to move that the bill be now read a third time.
The question is that the bill be now read a third time. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it.
Variable Capital Companies Bill.